Good afternoon, everyone.
It's an interesting time.
Welcome to the Foreign Correspondents Club of Thailand. Thank you for coming to today's event with Dr. Mark Mobius. My name's Greg Lowe. I'm an FCCT board member and I'm moderating today's event. Before getting started, there's a couple of club announcements to make. Next Tuesday, the FCCT, in conjunction with the Dart Centre for Journalism and Trauma, will be running a full-day seminar on enhancing resilience for media professionals. The recent bloody political events in Bangkok clearly demonstrated the physical risk journalists are exposed to in the course of their work. This workshop aims to help them better cope with the psychological impacts of such events. Entrance, including lunch, is 150 baht. Also, for those of you who are not FCCT members, you can pick up an application form near the entrance. Events such as today's talk with Dr. Mark Mobius prove the value of becoming a member, for whom all club events are free. The ability to purchase DVDs of club events such as today's is also an exclusive privilege for members. If anyone wants to buy a copy of a video of today's event, you can let the office know. It's 300 baht. Financial crises and recessions over the past few years have seen the traditional powerhouses of the global economy falter, with investors increasingly seeking out opportunities in emerging markets such as Asia. The trend is likely to stay as the economic resilience of the US and Europe continues to be challenged. Some analysts fear that the sovereign debt crisis which ignited in Greece and spread across the EU could dwarf the 2007 subprime meltdown and lead to a breakup of the Eurozone. While recent data from the US paints an increasingly gloomy economic picture, with the US Federal Reserve recently stating that the recovery is losing steam, leading to the worst approval ratings for President Obama since he took office. However, for leading fund manager Dr. Mark Mobius, the opportunities for investment and growth offered by Asia and other key emerging markets are nothing new. For more than 4 decades, he's taken a bullish stance on investing throughout the region. He was one of the first US fund managers to move to Hong Kong, and in the 1970s he spent time living in Thailand, a country he's continued to invest in. He joined Franklin Templeton Investments in 1987, where he set up the world's first emerging markets fund, and he now serves as the president and head of research of the Templeton Group. His success has led to a string of awards and accolades, including the International Money Marketing's Emerging Markets Equity Manager of the Year. A Carlton Group survey proclaimed him a top 10 money manager of the 20th century, and Reuters announced his fund as the #1 global emerging markets fund. Today he'll share some of his insights and experiences of the opportunities and risks associated with investing in emerging markets. For about the next 20 minutes, Dr. Mobius will be interviewed by Paul Gambles, an FCCT member with more than 25 years' experience in the finance industry, which has included posts at the Bank of Scotland and his current position as managing partner of MBMG International, a local consultancy. After that 20-minute session, we'll have about 40 minutes for questions from the floor.
Great. Welcome to the FCCT, Dr. Mobius. Could I start by asking you about the legendary Sir John Templeton, who was one of probably the greatest emerging market pioneer. What are your abiding memories of working with Sir John?
It's interesting you mentioned that, because just yesterday I was sent a recording of an interview he made after he had sold his company to Franklin Resources, our company. And what he said in that interview I sent to all of our analysts, because I said, if you listen to this and listen to it 10 times and follow what he says, we will do very, very well. Because he had a very definite sense of principle. He was a dedicated long-term investor. He was very wise in the sense that he always was saying that, look, the only way you're going to get a bargain, an investment bargain, is by buying what other people are selling. It's no sense in following the crowd, because you're not going to get a bargain by definition. And also, the only way that you are going to make money from a bargain is by being long-term.
Very true.
Because a stock that does not look very good to everybody else could continue to go down for a long, long time. So you've got to wait until the value is realized. The other thing that he inculcated in all of us, and we worked with him for many years, is a sense of morality. He really felt that what he was doing was good for mankind, and the way he invested was oriented in that direction.
Sure.
Of course, today, environmentally friendly investing, politically proper investing is becoming more popular, but he was doing that way back when.
Yeah.
So he's really a great inspiration.
Okay, well that's common sense and morality never go out of fashion, except on Wall Street perhaps sometimes. If I could move on to Thailand now, which I think is going to be very close to the hearts of a lot of people here. Without getting involved in the political machinations, Thailand's obviously somewhere you know very well from living here in the 1970s and from a lot of subsequent visits here. Do you think that right now this is a good time to be investing in Thailand?
Yeah, we've been investing throughout this whole period. In fact, a lot of our clients were asking us, why are you investing in Thailand? And that was, during the last 12 months. We've been increasingly investing here. In fact, if you look at our total global assets, which now in our emerging markets group, it's about $37 billion, about 9%, over 8%, nearly 9%, is in Thailand.
And a standard emerging market allocation might be, what, 1%?
Yeah, I mean, it'd be much, much less than that. So here's a good example, by the way. Everybody thought that Thailand was going down the tubes. There were riots. In fact, I should have been here about 6 months ago, because we were planning to open an office in Bangkok, but the office in which we were planning to lease burned down as a result of these.
So you experienced this personally.
So we realized that we had to wait a while, and now we're back. We
couldn't have been at the club 6 months ago, 3 months ago either. I don't think either.
So we, having lived here, having had the experience all of these changes of government that we've had all this time, we've seen the improvements. A lot of people miss that fact. I think it's only if you've been here for a long time and have lived here that you are able to see the improvements that are taking place. I remember I used to live at Soi Sawati here in Sukhumvit. That was a remote part of Bangkok at that time. I mean, that was like in the sticks, you were in the farm area. So in that sense, it's been very gratifying. And of course, our patience and fortitude paid off, because this year and last year, Thailand has been, after Indonesia, the best performing market.
Sure. And I think that probably bears out, your answer to the first question about Sir John Templeton as well.
Exactly.
That's the same kind of theme. Okay. What have been the key events then? I mean, you've been working in Asia and in emerging markets for 40 years now. And what are the key events that you've seen? And what are the main changes that you've seen? You were talking there about you noticed changes over the long term. What are the really big changes that you've seen in that time, for better or for worse?
Well, true of the global situation, the really big change has been government philosophy. And what I mean by that is a change in philosophy from a socialist orientation towards a market orientation. In other words, people began to wake up to the fact, in government, began to wake up to the fact that if you want economic growth, you've got to have a market economy. In other words, the incentives and the signals have got to come from the market, not from some policy directive, not from some economist, not from some bureaucrat, but from the market. And that led to a plethora of privatizations, companies going into the market. That really has changed Asia and, of course, the rest of the world.
What's
as we've
interesting,
seen.
do you think the rest of the world's in the same cycle, or do you think maybe the developed world's going the other way right now?
A good point. General Motors is owned by the U.S. government. Yeah. Well, that's what I said recently. I said, you know, Obama is moving in the wrong direction. He's moving in the opposite direction of emerging markets because it's more government interference, government
Exactly.
involvement in the economy, and other countries going in the opposite direction.
So, so Asia's probably learning the right lessons, and the West needs to watch out it's not learning the wrong ones. You know, again, talking about this theme of change, things changing quite dramatically. So, when you lived in Thailand, out in Soi Sao-Gi, which coincidentally is virtually where I live these days, and it's definitely not out in the sticks anymore. Thailand, a lot of people regarded Thailand as a frontier market in those days. It really was. You know, it wasn't an emerging market; it was a frontier market. Did that create any particular problems or any particular opportunities?
Problems and opportunities, because liquidity was so bad in those days. I was here before the Thai Stock Exchange. There was a Bangkok Stock Exchange.
Okay.
And it was run by a gentleman who had a money market broker operation. I remember walking into his office, and it was Mr. Bird. I don't know if any of you old-timers remember Mr. Bird, B-I-R-D. He had a sort of a money market operation. And I went into his office. I said, Mr. Bird, where is the stock exchange? He said, you're in it. Look behind you. And I turned around, there was a blackboard, Bangkok Stock Exchange, with all the prices. By appointment only, you know. So, you know, things have changed. In that sense.
Absolutely. So what talking about frontier markets, what frontier markets do you like today? And I noticed in Citywire recently you did a postcard from Slovenia that was somewhere you were quite excited about.
Slovenia, yeah. Slovenia is really an amazing country. By the way, you know, a sidelight, you know, a lot of people say, oh, China's taking over all manufacturing, there are no opportunities, they're driving us out of business, blah, blah, blah. But then I go to Slovenia. By the way, Slovenia is different from Slovakia.
Yes, it is these days.
We had an ad in the States, you know, about emerging markets, and I got on the camera and said, do you know the difference between Slovenia and Slovakia? And the phone started ringing off the hook. Nobody knew the difference between Slovenia and Slovakia. So it was a very, very successful ad. Anyway, Slovenia has a company that makes refrigerators, washing machines, and that sort of thing. Very high quality stuff. And they are exporting to China.
It's interesting. You never hear that
Yeah,
story.
I mean, it's a 2 million population in this country, and the first city they went into has a population of 3 million. So, you know, but the opportunities are there for this relatively small company for high-end, beautifully designed refrigerators, washing machines, that sort of thing. So it gives you an idea of what can be done. So, you know, in terms of the frontier markets, the biggest one for us, the biggest four for us now are Vietnam, Ukraine, Kazakhstan, and Nigeria.
Okay.
Now that's very, very different from regular emerging markets, as you can imagine. For the regular emerging markets, of course, the big ones are China, Russia, India, the BRICS, Brazil, Thailand, Turkey. Those are the big ones.
But it's interesting, again, I mean, picking up on your theme of, you know, one of the big changes you've seen is the liberalization of markets. That, you know, three of those are former communist economies.
That's
so
right.
They're getting into the liberalized, and there are opportunities, I guess, that come from that. So.
That's right.
Okay. Obviously, as I mentioned before, you spent 40 years now traveling around far-flung emerging markets. We were talking earlier, and I think everybody was a little bit shocked at how much time you spend on aeroplanes every year. I think that film Up in the Air could have been about yourself rather than George Clooney. But looking back on your career, I mean, you must have seen an awful lot of things in that time, and you've obviously done and achieved an awful lot in that time. What are the proudest achievements of your career so far in those 40 years?
Well, I would say the fact that the growth that we've experienced. We started out with the very first emerging markets fund in 1987 with $100 million.
Okay.
Merrill Lynch launched this fund on the New York Stock Exchange, still listed there, closed-end fund.
Yep.
And we started out with $100 million, and it was really difficult to invest, because in those days there were only 6 markets in which we could invest. All the other markets were closed.
Plus Mr. Bird.
Because of foreign exchange reserves. You must remember the Andean Pact in Latin America was a pact to keep out foreign investment,
Exactly, yeah.
not to get foreign investment in.
Yeah.
So you had all these barriers, and I'm really proud of the fact that we were able to open up these markets. We had to visit these countries. Of course, the first thing we need to do is get a custodian to hold SOC. Then we had to go and look at the accounting and align the accounting one with the other. I remember visiting Sri Lanka. We were in a tire company, and I was looking at the balance sheet, and something popped up at me, illicit assets. And I was wondering, illicit assets, that's an item I've never seen on a balance sheet. I had to ask the management, what is this, is there funny things going on here? It had turned out to be non-performing payments.
Okay.
Anyway,
Just lost in translation.
so these are the kinds of things that you had to go through. So I'm really proud of the fact that we've gone from 100 million to 37 billion.
Wow.
And we haven't stopped yet. I mean, it continues to grow. And a whole industry has been formed. I mean, we're not the only game in town anymore. We've got, many, many people in emerging markets.
No, absolutely. It is an industry that's grown. I'm just wondering how many Thai businesses have got illicit assets on their balance sheet somewhere, but probably better that we don't know. Statistics have shown that in general, it tends to be best if investors don't actually make their own portfolio allocation decisions. Speaking as somebody who's a financial consultant, it actually terrifies me that a lot of financial advisors actually take it upon themselves to go and make portfolio allocation decisions. Fund managers like yourself, I guess, obviously have their own particular sort of special interests and biases. So I guess because of that, I firmly believe that diversified, impartial portfolio allocation is actually a specialist skill. It's something best left to specialists. As an emerging market fund manager, do you agree with that, or is it something that you like to get your own hands on yourself?
No, I think if somebody has the time and the inclination, they can do it themselves. But most people don't.
Mm-hmm.
Most people are more interested in watching the World Cup than looking at their portfolio.
Yeah.
Most people have a family that they've got to look after. And most people have a job, a full-time job, in which they're very interested. So the vast majority of people are not really interested in their portfolio or their assets. So it's very wise to pick somebody to do that for them if they can trust these people.
True.
And if they're convinced that these people will do a good job for them. Not create them, billions of dollars, but at least keep the assets growing over the long term and safe.
Yeah.
So I think that's something that people should keep in mind. And the other thing is that one of the things that people overlook, and by the way, this is true of institutional managers as well as individuals, and that is they tend to only look at their own home country.
Absolutely.
And if you do studies, we've done studies going back 30 years, no one market is the best performing market 2 years consecutively. And over those 30 years, there are only 2 markets that were the best performing at some time during those 30 years. So that tells you, if you want to find opportunities, you got to look globally.
Sure.
You just cannot look in your own country. And that's one message that we try to get home to people. Very important.
Obviously, it is getting home if global emerging markets has gone from $100 million up to $37 billion.
That's right.
So, What would you say right now to convince either a private investor or a portfolio allocator that they should be putting money into emerging markets at this time?
It's all about growth.
Mm-hmm.
Emerging markets are growing at more than double that of the developed countries.
Mm-hmm.
Emerging markets have a lower debt to GDP
Mm-hmm.
than developing countries, developed countries. Emerging markets have more foreign reserves.
Mm-hmm.
So there are a number of factors you can look at which make emerging markets very attractive. Now, it doesn't mean that you have to buy now, because the markets tend to be a leading indicator. So if the outlook is very good, the markets will move first.
Sure.
Which brings you to the next dilemma. When is the best time to invest? And I remember many years ago, we were at a conference in Canada. We had a big audience, and we're getting questions from the audience. And a young lady got up, and Sir John Templeton was at the podium. And she said, "Sir John, I just inherited a lot of money, and I'd like to know when is the best time to invest." He paused for a minute and said, "Young lady, the best time to invest is when you have money." And I thought to myself, that's an amazing, strange thing to say. And I started doing a little research, bull and bear markets and so forth. And one of the things you'll find out is that bull markets last longer than bear markets. And bull markets go up more in percentage terms than bear markets come down in percentage terms.
Yeah.
So if you know nothing about what is going to happen, you're better off being invested. That doesn't mean, of course, you're going to just pile everything at once. But cost averaging over a period of time, you should do fairly well.
I think that's very good advice. Greg, if I could pass back to yourself, and maybe you want to